Time for business news now. We're joined on set by Stephen Carroll for that. Stephen, we're going to start in the United States, where the Senate has passed a bill aimed at countering, China's growing technology centre.
The US Innovation and Competition Act is a $250 billion plan to boost spending on technology, research and development. It's targeting areas like artificial intelligence, quantum computing and semiconductor microchips. But the draft legislation also contains measures directly targeting China, like restricting the use of TikTok by federal employees and a ban on Chinese manufactured drones. China's parliament says the bill is an attempt to smear its country's policies, labelling it as a paranoid delusion. The bill was passed by a bipartisan majority of 68 votes. It will now be debated by the House of Representatives. It's being described as the biggest investment in scientific research the US has seen in decades.
As a percentage of GDP, we spend less than half as much as the Chinese Communist Party on basic research. If we do nothing, our days as the dominant superpower may be ending. We don't mean to let those days end on our watch.
$1 billion off this bill is earmarked for making semiconductor microchips. Now, I know they're an essential part of many circuits, most circuits, but why is it so important that the US increases that specific production?
Well, it's essentially because it's in almost everything that we use. They're in our computers, in our smartphones, in our cars, and there's a global shortage of them, which is the other problem, partly because of increased use of technology, but also because we're expanding the areas where these chips are important. So we've seen, for example, car makers have to stop production in some cases because they've run short of these chips. The goal of the bill and of Joe Biden's White House is to boost manufacturing in the United States. That's because the majority of chips are currently produced outside of the US, an industry dominated by Taiwan and South Korea. They together have 43% of the global manufacturing market. The US has just 12%, and that's a percentage that's been falling since 1990. All of this despite Intel, which is an American company, being the biggest global player in this market. Making semiconductors is an expensive process that requires highly specialised facility, so it needs massive investment to get up and running, hence $52 billion.
Fair enough. Well, let's stay in the United States. Authorities are investigating a leak of documents showing the super rich paid little to no tax.
The journalism non-profit ProPublica obtained a trove of data from America's Internal Revenue Service that showed the tax bills of some of the country's richest people. According to their reporting, the documents show that Amazon founder Jeff Bezos paid no income tax in 2007 or 2011, while Elon Musk's tax bill was zero in 2018. The Treasury Department has asked the FBI to investigate the leak, as these records are considered confidential documents.
Well, let's move back to here in France, and as we were looking at earlier today, today marks the next stage of the easing of coronavirus restrictions.
A big day for some businesses, but non-essential shops are taking stock of their first 3 weeks back in business since they reopened. Before they had reopened, there had been warnings that retailers were drowning in unsold stock that had built up during the lockdown, a problem that's been helped by a rush of customers, as Catherine Viette now reports.
Was the scene a few weeks ago in store stockrooms.
85 000 € de marchandises.
It's been 3 weeks since stores have reopened and the customers are back. Good news for shops that have accumulated a backlog of inventory.
On n'arrête pas. On n'arrête pas, mais vraiment, on travaille énormément et on est ravis de travailler autant.
Still, new merchandise continues to arrive, while the old stock is being sold bit by bit.
On en avait beaucoup. On en a vendu pas mal. Il nous en reste encore. Il faut qu'on se revoie à la fin des soldes.
Since the shops have reopened, the French have been giving their credit cards a workout. Just on May 19th, clothing purchases were up 20%, jewelry sales were up 41%, and toys were up 34%. That's compared to 2019, before the pandemic struck. But there are some signs that the shopping frenzy may be slowing down.
Ça a démarré très fort, là ça se calme un petit peu. Je pense que les gens profitent un peu du soleil et des terrasses qui ont réouvert.
The government has announced aid to shops stuck with leftover stock, an average of €6,000 per business. But the aid only applies to clothes, shoes, sports, and leather goods stores. Shops selling other items will have to hope they have a good summer sales period.
Quick look what's happening on the markets next for you. We've had a mixed start to trading day in Europe. London and Frankfurt starting the day in the red, just some small gains at the open in Paris. Shares in the Spanish fashion retailer Inditex, which owns the likes of Zara, are up over 1% in Spain after their latest financial results. We had a similarly mixed picture in Asian trading earlier as well. New figures from China showing a big jump in factory gate prices. They were up 9% in May compared to a year earlier, and that's feeding into general fears around rising inflation. Eve.
Stephen, thanks a lot for that business update.